Good morning, everybody. Welcome to the show. Good morning, Axel. Thank you for joining me as
Chris.
ever on Nvidia earnings, or the morning after Nvidia earnings, put it that way, after the biggest company in the world reported earnings that I think is safe to say were viewed as underwhelming. When you make nearly $70 billion every quarter, it's really hard to impress, isn't it?
I mean, people are just getting fatigued, I think, now. And as you say, I mean, the results were actually stellar, as usual, but they weren't enough.
$250 billion in a year in revenue, and then huge profits, and yet still the market simply shrugs its shoulders and nobody... It's not as if they don't seem to care, but it really is a case of people saying, what more can you do for me, I think is really what they're saying at this point. And the stock, of course, has gone nowhere for months. You've probably got the chart better than I have up in front of you, actually, to be fair.
I haven't, but
sorry.
I thought I was going to do the FTSE 100.
Let's do the FTSE 100 movers then first, quickly. We'll come back to Nvidia. We'll do Nvidia in more detail.
Shall we have a look at mine here?
Yours? Is that yours?
I don't know whether it's mine.
Yeah, that's yours.
Basically, what we can see here, London Stock Exchange. So that's after solid results earlier this morning.
And the buyback, which is announced.
Buyback has definitely helped here, up 4.48%, so looking really, really strong here. And other than that, I mean, it's a mixed bunch, isn't it, if you look at this? Croda International, so we've got some chemical companies here, but not really up that much. I mean, it's basically 3i Group and London Stock Exchange, which are up here. Yeah. And if we look at the fallers, we've got Fresnillo, Anglo American, and all the different miners.
Sorry, let's get yours on the screen. Sorry,
sorry.
No, Phil's been. No, it's.
I wasn't aware that
struggling to keep up with my thought. I'm confusing people deliberately. Yes,
basically, so the miners down today, as the gold price also took some profit taking, and yes, I mean not much going on here. But I don't see Rolls-Royce nor Ocado, and that's surprising.
No, those are the two big news, the other big news this morning. Let's just the Rolls-Royce news is obviously they've, again, another company with massive share price appreciation, fantastic results, and a buyback as well, $7 to $9 billion worth, £billion worth of buyback. I apologise. And then Ocado cutting jobs, but I suspect they have not. Rolls-Royce is yet to open.
Yeah, I think that's the reason why we haven't
seen
that
this morning. And I would guess Ocado is also poised. Ocado is down 6%. I can get that up for you on my chart. Another of these. It's just drifts and drifts and drifts down and down and down. And I think it's. I don't know off the top of my head. I think it's still one of the most heavily shorted in London. Ocado is still quite a bit shorted, which you can understand because this is the promise of, this is the weekly chart. It's probably even worse on a daily chart. We're not going to do the fail to deliver puns because that would be far too easy. But other supermarkets are available, I suppose, in replacements. That was a tortured pun around. I'm going to give up now. Share price moving down this morning, down 5% lower. It's never good to try and pun on the fly. What you've had here, 213 was kind of support from earlier. I say support, it's where the shares stopped going down, which is about what you can hope for from Ocado at the moment. It just continues to come under pressure, and the results this morning, very much a kind of patch-up job, I think, off the back of them. Really not doing much for there. So those are the two. That's the other big news this morning. Still nothing on Rolls-Royce, so bear with on that one. London Stock Exchange nearly 5% higher. And declaration here, I do still own London Stock Exchange shares. No, it's not been a very fun year because they were such a great performer, unstoppable from so long ago. And if you go even further back, it's been a fantastic run. Maybe, I suppose, I can say this with some hope, that monthly candle, maybe that marks something
if
there.
It
Go on,
finishes
Axel,
like
ruin it
this,
for me.
it is looking like a hammer formation. That would be quite positive, yes. But quite frankly, if you did look at your charts at the beginning of 2025 in March and April, Chris, you might have gotten out then because technically speaking, you were falling through a long-term uptrend and you had this big bearish candle then, and that was sort of the end of the up move, technically speaking. But yes, I mean, hindsight is a wonderful thing, isn't it?
Yes, and I speak as somebody who held Next all the way through their sort of 5-year sideways move in their share price. They hit record high and took 5 years to get back there again, and now they're higher again. So sometimes it works, sometimes it doesn't. Let's not be
Plus, I mean, if you get the dividend, you get income anyway.
Yes.
And you can
and
always
so
come
on
back.
LSE, fundamental dividend of 1.7, so nothing spectacular. Trading at a not too cheap 27 times earnings. That is the normalized. I wonder what the forward is. I don't know if I might look that up because, of course, we'll come to Nvidia in a second, but that's might almost be cheaper than the forward P for Nvidia. Another matter. Generally, this morning, in terms of our macro outlook, FTSE 100. I was asked yesterday, when does it hit 11,000? And my answer was, well, on current performance, because it's up 200 points in about a week, sometime next week is the way it continues, because that's where we are. It's just incredible start to the year. Words just, for an index that even I will put my hand up here, and I've been taking the mickey out of it for a long time. You know, it's the index worth less than one company. On the S&P, it's smaller than Apple. It's got full of boring, unexciting companies. It turns out boring, unexciting companies are the place to be in 2026, aren't they?
Certainly. And also, I mean, what a lot of investors and traders have done over the last week or so, they sold into this rally, adding to their shorts, thinking, no, it surely can't go any higher. And as we keep saying, Chris, I mean, the trend is your friend, and quite often you get this last surge higher, which we're currently seeing towards 11,000 probably, just stopping all of these people perhaps out. And then once you've had this sort of surge higher, then maybe you see a reversal. But right now, even with miners coming off today, the FTSE's back at very close to record highs. So, you know, it just keeps on rising. Don't fight the trend. Don't fight the momentum. It's clearly, as you say, defensive stocks are in favor at the moment because we are not so sure about these AI valuations. And at the same time as you've had, you know, miners doing really, really well. And even when they do come off like today, the FTSE still keeps on rising.
And is it because you've got banks, pharma, miners, defense? They are, I mean, you might argue banks aren't immune to AI, but it's very hard to use AI for digging stuff out of the ground. It's very hard to use AI to build a missile. You can probably help the process. And you can use AI, presumably, although I wouldn't trust it for a pharma trial. But you can, I suppose, use that. But it's not an immediate kind of victim of this AI trade that is going from door to door and picking off these sectors. It's software, it's accountants, even logistics firms. Obviously, 2-3 weeks ago, that company that makes karaoke machines and now has an AI machine to improve logistics. It's going from one to the other. But the FTSE 100, I wouldn't say they're immune, but they seem to have more of a moat that gives them that defense because it's harder to get AI to. The immediate benefits don't seem to be there, at least not yet.
Yeah, I fully agree with that view. And yes, I mean, you know, if you look at the DAX, for example, which was the darling last year, it's not doing that well. It's really struggling. It looks very much toppish here, sort of sideways trading, just grinding higher, but nothing spectacular. Yet the FTSE keeps on rising, keeps on having these record highs.
If you look, obviously, you can just buy. I'm a big fan of sort of just getting a sense of things from just eyeballing the chart. Maybe that makes the tech analyst in you scream, but just if you just use your almost common sense to look at it, the momentum is there. It's whereas you had the DAX side by side with the FTSE 100, you would see how it's not working out, and yet the FTSE 100, every small dip gets bought. This doesn't go on forever because the DAX has been through that period over the last decade and a half. We've had periods where the DAX was having a huge, particularly around the ECB QE days, so those glory days are past. But it's interesting how this kind of rally is seen from time to time, and the caravan moves on, doesn't it, from one to the other?
Certainly. Talking of the caravan moving on, oil prices are also interesting because they seem to be finding it more difficult to rise further as we are still awaiting the outcome of the US-Iran situation. But OPEC Plus yesterday raised output by about 137,000 barrels, I believe.
OPEC doing its best to sort of pour water on the oil price rally. So yes, we're at 65. I think Goldman's this morning saying the geopolitical premium is about $6 to $8 in the oil price. Don't ask me how they've calculated that, but they have. We do have, well, this is on my chart. Is that a golden cross? Is that a golden cross we see before me? That is the 50-day crossing above the 200-day moving average.
It depends which definitions you use. For me, it isn't, because what I want to see is both moving averages moving higher, and they are not because you've got the longer term moving average.
Is that the
orange
correct
one.
definition of a golden cross? Then they both have to be moving in the same direction.
Well, it is. It has been for the last 40 or 50 years. John Murphy's book back in the 1980s said it was the 200-day and the 50-day that needed to cross. But since then, most people now look at the definition which I've just given, which is the two moving averages. Doesn't matter which time frame they're looking at, both need to point in the same direction. So both upwards or both downwards, which is then a dead cross. But yes, in this case, it's not a golden cross. Plus, I mean, if you look at golden crosses and things like that, yes, I mean, fine. If you get a nice trend afterwards, they do work in hindsight.
There is your
but you
previous
can see,
one.
Yeah, it doesn't always work. I mean, for me, moving averages are just an additional indicator to the price analysis, and price analysis is far more important. And the question here on this chart is, are we going to continue to rise or are we sort of starting to top out? And that will very much depend on what's going on in the Middle East.
Yes, it does. And that looks very much like the ones we've 1, 2, 3, 4 previous sharp bounces in oil, and they all end the same way.
Yes.
Now, history doesn't repeat itself, but it does rhyme, etc., etc. You can trot out the cliches as much as you like. So it's that the rally is, I suppose, because they're guilty until proven innocent, is still suspect, because that is essentially still another lower high.
It definitely is on a medium-term trend. I mean, it's starting to break above these highs from sort of earlier last year, those ones, and therefore, we may actually be breaking through it. But also, if you go back to the left-hand side of your chart and see in October, November last year, that those lows, they were all resistance. So we've got a lot of resistance where we are right now, which, as I said to you before, means basically at the end of the day, it's going to be what's going to go on in Iran. If there is an attack by the US, this will just spike and go up towards these previous highs. Maybe Goldman is right then with their $6 or $8 analysis. But then I wouldn't be surprised if it does come off again once things quieten down. And we've seen that with natural gas prices recently, when in the US they went absolutely mad and went parabolic. And then suddenly they came all the way back down again when the cold spell that everybody was so worried about abated.
Because that's the bear case rule, isn't it? That if there is a US strike in Iran, we're still even not sure there will be one. But if they go for one, and then negotiations take place, and Iran doesn't close the Straits of Hormuz, there's no long sustained campaign. Yeah. Then the supply scenario for oil just reasserts itself, doesn't it? So as we were saying, we've said before, positioning was so bearish in oil heading into the end of the year. Everyone was underweight crude, understandably, because it's been going down, underweight energy stocks. So when you have such positioning on one side and then it moves, it only takes a bit of a rally to sort of just cause these big bounces. But the overall situation remains the same as it did, which then argues for maybe that this bounce goes the way of all the others over the last 2 years. We should do Nvidia. We can't not talk about Nvidia if we're probably all bored of talking about the world's largest company, of course. They just really can't do any more. It's a case of, $70 billion in revenue. Well, that's not very exciting anymore. This is a company that's beaten earnings at least 10 times in a row. It's
unbelievable, isn't it?
It was definitely, because Bloomberg, it says 8 out of the last 8 and how it does, 8 out of 8. And I think he must have done it before then. And it's done it again last night. And the guidance was strong. Share price popped a little bit by 4%. Maybe when you're worth $4.5 trillion, it's very hard to move the share price.
And also, I mean, if you are long Nvidia, which a lot of funds, etc., are,
you can't get longer, can you?
Well, there comes a point where you need to look at your risk, because it is such a big weighting in a lot of portfolios. Investors are getting more jittery about investing more into this company, and also with regards to what we've seen since November of last year, these worries about AI valuations perhaps getting slightly
It's just not going away, is it? You can make tens of billions of dollars every quarter, but the fact that the big names are planning to spend $600 billion this year, which is more than the Apollo program in modern dollars, it's more than defense budgets of a number of middle-ranking powers combined. You can sort of tout these numbers. It's a question of, well, we don't know. We just don't know whether all this will be worth anything over the longer term. And that's why you can beat expectations, you can post strong guidance, you can give a fairly bullish earnings call. Jensen Huang was very bullish and very optimistic in his earnings call, and they should know, to be fair. But the market, I mean, yes, the share price has rallied decently from these lows, essentially we have moved sideways now in Nvidia since the middle of September, haven't we? Really.
But we haven't come off like other shares. Like
we haven't gone down
exactly.
either. We might have gone up, but we haven't gone down either.
Yeah. And if you look at some of the Magnificent Seven stocks, they have come down. I mean, if you look at Tesla did come down, and some other ones as well. So yes, interesting what's going on there. What's also interesting at the moment is if you look at my chart, is the US dollar, because this sideways trading has started here as well. I mean, look, we're just going nowhere here, and we're sort of struggling around the early February highs. So we had this period where the dollar was appreciating for a week or so, just a couple of weeks ago, and now we're running out of steam. So is that a question of the safe haven trade in the dollar because of that whole Iran-US situation? Now, sort of just
if that goes away, you take away some of the bid, don't you? Really?
Yeah.
And obviously, we don't have Greenland anymore to worry about. It's dropped off the radar, despite him sending a hospital ship or whatever it was this week. Crazy drama. And this is obviously 2 weeks after the FT headline about everyone was bearish on the dollar.
Exactly.
And it's now recovered.
Yeah.
But then, of course, I suppose it might start to move again. And you've had some US data. Obviously, inflation last week showed that price growth wasn't as strong, leading towards maybe, I think still it's pricing June. We don't seem to talk about Fed rate cuts anymore.
Well, I think that there's a 98% chance now, according to the CME FedWatch tool, that we're not going to get a cut in March, that's for sure. And as you say, it's sort of fluctuating between June and July. And yes, I mean, not many people are that interested in it anymore at the moment. No. It's sort of slipped a bit to the back.
That you can see that's on mine, the 98% chance of a hold in March, and then it really, April's still hold, and then it's June is for the first chances of a cut starting to creep through 41%. I think July is still, July has the edge on a cut. Still another 25 basis point cut. So that's what we're expecting really today.
I mean, data-wise, sorry, Chris, but I think tomorrow we've got PPI, haven't we? That's the only sort of interesting bits. Yeah. I mean, obviously jobless claims today as usual, but at 1:30 p.m.
Yeah.
But yes, I mean, it'll be interesting to see whether the PPI inflation is coming down or not. And also what different Fed members will be saying, because they've been speaking all of this week. But again, usually we would focus much more on this, and it's all been about Nvidia. Now that this is out of the way, what's the next
market?
thing?
I've always thought the market isn't very good at concentrating on more than one thing at a time.
No,
which is odd given the amount of people involved in it. But it does tend to focus on one thing, and then the caravan moves on towards. We'll go back to the Fed. Speaking of things to move on from, Rolls-Royce has finally probably opened a while ago, to be honest with you, up 6% this morning, gapping to a new record high. Yes. So there we go. Another, and maybe this is the sort of Nvidia of the FTSE 100. It's still in the earlier stage that Nvidia was about 18 months ago, where it does continue to rally on good news. And when you're promising to spend £8 billion on a share buyback, that will also generate that upside, won't you? So more fantastic news coming from Rolls-Royce, even with a lot of the news about defence budgets baked into the share price.
Yeah, I mean, it's an amazing share. And a lot of people don't realise that the advance in the last 2 years is very similar in percentage terms to what we've seen in Nvidia.
Yeah. If you just
I can't remember any other stock in Europe that has had this sort of advance. I mean, it's unbelievable.
Not for a long time, no. And not one so... And from a company that was already fairly established. It's not exactly... It's a small startup. It's not,
exactly.
It's not an avocado of 10 years ago. This is Rolls-Royce. It's been around for more than a century at this point. But
again, here on your monthly chart, I remember sort of 5 or 6 months ago, a lot of people saying, well, Rolls-Royce can't go any higher. Surely this is too expensive now. And they got out of the share, even sold it. And look at the candles now. It just keeps on rallying.
Yeah.
And the candles are getting longer. So it's perhaps getting to this stage where it's becoming frothy. But you never know where the top is, and you should never try to pinpoint a top. It looks easy with hindsight, but in reality, I don't know anyone who can do this consistently. No. So you just ratchet, you take profit levels higher. That's all you do. You just run the trend, let it run. Because even here in October, November of last year, that was just a normal sort of ABC correction, and then back up we go. And from that low, I mean, we're up another, I don't know how many.
That's probably roughly 40%, I think.
That's
just
huge,
eyeballing it for the November lows. That's Rolls-Royce, big established defence company. And of course, the bigger it is, the more of a weight it is in the FTSE 100. So that's why it's become more and more important as we go along. So that's what we have on for today. So if we just, I forget who else is reported today. Once Nvidia's reported, nobody really cares, to be honest with you, because they are bigger, as we've said before, than everybody else reporting this week. But today we do have Dell, bless them, a name from the previous AI boom or the previous tech boom, reporting as well this afternoon. I think that's after the bell closes for Dell. And then tomorrow, not very much in the US because it's a Friday, so we've done quite a few in the US. IAG tomorrow from the UK, Pearson as well, and a couple of others. So we're watching for that. So FTSE 100, just finishing off, we are 10,800, content around those levels, and still pushing on towards 11,000. So the question is now, does it breach 11,000 first, or do we get 60,000 on the Nikkei first? That's I think the challenge for next week. But I think that's everything from me today. Just the initial jobless claims at 1:30 this afternoon, and then as Axel said, looking towards PPI tomorrow. Thank you very much, Axel.
Thank you, Chris.
Thank you, everybody. We will be back as normal on Monday.